Residual income is one of the most important components of a VA loan, even though it's never talked about because it trumps DTI, credit, etc. If you don't meet those requirements, you can't qualify for the loan. It's one of the many components that are misunderstood about the VA loan, which is why I'm glad you joined me here. Whether you're an active duty service member, a veteran, or just a civilian looking to learn more about the process, because a lot of veterans are discouraged from using VA loans just due to ignorance of folks out there on the market. So we're going to talk about residual income. We're going to talk about VA loan limits, which don't exist, believe it or not, despite what folks may tell you, except for they do sort of exist in certain scenarios. We'll get into that. We'll talk about who's eligible. We'll talk about property types, credit, and more in today's episode. If this is your first time hearing the sound of my voice, my name is David. I have a background in mortgage underwriting, mortgage lending as a loan officer, and as a realtor. So yes, that is the entire home buying process. I purchased multiple homes myself, but most importantly, I've helped hundreds of folks just like you buy their first home in real life. Let's go get those keys. Welcome back to House Rich, the first time home buyer show, where we provide you actionable steps in layman terms to buy your first home. Let's get right into VA loans. We're talking about who's eligible. Well, if you're watching this video in the galley or the back of the flight deck, or last week you were sitting around and somebody told you time to lean, time to clean, you're probably eligible because you're in the military. But the requirements are if you are either a veteran, wearing the National Guard, or on reserves, and you did 90 days of active duty post August 1990, you are eligible. Or you've done 6 years of credible, good service, you're good to go as well. And in the unfortunate scenario where you're the surviving spouse of a deceased veteran, here are the criteria for you being eligible for the veteran's VA benefits. The veteran is missing in action or a prisoner of war, or the veteran died while in service from a service-connected disability and you didn't remarry. There are a couple other criteria as well for surviving spouses, as well as people that serve time in the military. And I can't afford to go over every single scenario, but if you literally Google who's eligible for a VA loan, the first option that most likely will pop up is from a VA.org website. Check that one out. I'll also have the description or the link in the description so you can go there directly as well. Now, what if you have an other than honorable discharge, a bad conduct discharge, or a dishonorable discharge? You most likely will not be eligible for VA loan benefits. No matter what your scenario is, you're going to need to get your certificate of eligibility. You get that online, or if you need help, you can go to your regional VA eligibility center and they'll help you out. And so I went to a VA eligibility center when I was getting my disability benefits. So typically those are run by like veterans and folks that are really there to help you. I know sometimes like government run departments get these bad stigmas for being bureaucratic and all that, but these are the folks that are there to really help you out and help you through the process and help you jump through a lot of the tape and hurdles you may not understand from what you read online. So if you're having trouble, I highly recommend you reaching out to that, whether it's for a VA loan or just your VA benefits in general. Let's talk VA loan limits. There are no VA loan limits. Zilch, zero. So why do some lenders still say they're VA loan limits? Well, some are just misinformed. VA loan limits were 69 or 86, 69 back in 2020. Now, some lenders may know that and may tell you their VA loan limits because they are things called lender overlay. So all lenders, whether it's VA, USDA, any loan can add requirements on top of the minimum guidelines set by, in this case, set by the Veteran Affairs Branch. So you may hear the VA loan limits are $766,550, which is the maximum conventional loan limit for a single family property. But if you have never had a VA loan or you've had a VA loan and you sold that property, you have 100% eligible and you can, in theory, go up to any loan amount as long as you meet the credit, DTI requirements, etc. You can actually qualify for that property. Now, here's where it gets a little bit tricky with the VA loan, the down payment requirements, etc. If you currently have a VA loan, that's when you're not eligible for that unlimited VA loan cap, which may be capped at the $766,550 ceiling. If you're like in a high cost of living area like LA, parts of New York, that limit is a little bit higher. So you have to work with your lender and use the eligibility worksheet to determine how much VA loan entitlement you have left. Now, so there may be scenarios where you have to weigh, do I want to use a conventional loan and put down maybe 5% or 3%, or an FHA loan and put down 3.5% versus 3%? Because in order to get that VA entitlement and use that VA loan twice, you may have to put down maybe 8%, 9%, 10%. So you want to weigh the pros and cons there. A pro of the VA loan is there's no mortgage insurance no matter what you put down. And with the FHA and conventional loan, of course, there's mortgage insurance on those loans. So that may be like a couple $100 difference between the your monthly payment, because you're putting down more for the VA loan, but you're not required to have any mortgage insurance, and most likely your interest rate will be lower as well. So you may want to run through those scenarios with your mortgage lender. Another scenario I'll run through with you, and I'll recommend not doing it, is I'm a realtor in Dallas and would love to help you reach your goals of home ownership. So click the link in the description and just schedule a call no matter where you are on your journey. Not in Dallas? No worries, I can help connect you with a vetted realtor in your local jurisdiction as well. And feel free to share with friends, family, and foes. Everyone gets love. If you're applying for a VA loan with a non-veteran who is not your spouse, or let's say like your fiance in my scenario, or just a friend. I don't know why you'd apply with a friend, but let's say you were. The down payment automatically goes to 25% for reasons that remain unclear. So like in this house right here, my wife and I were fiance at the time. And I was like, oh, we can apply together. And they were like, yeah, you can, but you got to put down 25%. So we chose not to go with the VA loan in our scenario. Now there's no down payment, but there's something called the VA funding fee, which you do have to pay when you're using a VA loan. And it varies depending on if you're a first-time home buyer and how much you put down. So if you're a first-time VA loan user and you're putting down 0%, that funding fee is going to be 2.15%. If you've used the VA loan before, it's 3.3%. So for instance, let's say somehow you found a home that's $100,000. That VA funding fee for your first time using the VA loan would come out to $2,150. Going all the way up to, if you put down 10% on the VA loan, that VA funding fee would be 1.25%, whether it's your first time or you've used the VA loan before. Caveat, if you're a disabled veteran, the VA funding fee is waived. And that, once again, will be on your certificate of eligibility. Speaking of waiving fees, the majority of lenders waive their processing fee, underwriting fee. It's called a bunch of different things, but typically lenders charge about $1,000 or so to process the loan. But with VA loans, they'll typically waive that fee. So look for a lender that will waive that fee. And if you don't know if they do or not, ask them, do they waive any fees for VA loans compared to other loan types, such as conventional or FHA. Now you can use the VA loan for multiple types of properties, whether it's a single family, of course, multifamily, or condos. Of note, when I was talking about those loan limits, so let's say you're buying a 4-unit property. You may recall that with like a conventional loan, if you're buying a 4-unit property, the loan limits are a lot higher than for a single family property. Unfortunately, with the VA loan, they still use that 1-unit conventional loan limit, whether it's 1, 2, 3, or 4 units. And also, if you're looking to buy a condo with the VA loan, make sure you vet that property before you put in an offer, because I'll give you another personal example. For me, when I went to buy a condo here in the Dallas area with my VA loan, I wasn't able to because the building was not insured by the VA. And so that process takes a little bit of time. So if the building isn't already insured by the VA, you may not be able to use that VA loan unless the seller is willing to wait for the building to be insured, which they probably will not do, just to be honest with you. There are no minimum credit requirements required by the VA. However, most lenders have lender overlay, so they're going to see you at about a 620 or above credit score. When it comes to your debt to income ratio, the VA recommends a 41% DTI, but once again, it's a recommendation and lenders can go above that limit. I've even seen scenarios where lenders have let someone go up to like 60%. I would not recommend you going up to 60% because your real life debt to income ratio is probably going to be over 100%. You're probably going to be house poor because your lender is only counting your monthly finance debts into that DTI. They're not calculating in your just your weekend expenses, your I don't know, your gambling habit, not counting in like stuff you do outside of what's financed on your credit report. Now let's get to residual income. So one of the reasons that the VA loan is one of the least defaulted on loans is because it's such a thorough process, and we need to meet this residual income requirement. Your residual income is your gross income minus your monthly finance debts, which is already part of your DCI, plus minus any child care expenses and utilities, things that aren't factored into the normal DTI or qualifying process for any other loan. And so if you don't have the requisite residual income, you cannot qualify for the loan. So it changes depending on what area of the country you're in and how many people are in your household. For instance, if you're in the Northeast with a family of one, you need at least $450 in residual income when it's all said and done. The lowest number is if you're in the Midwest in a single family, and the number is $441. The highest number is if you're in the West and have a family of five, you need at least $1,158 in residual income. So if you don't have that, unfortunately, you cannot qualify for the VA loan. The last thing we'll cover is the appraisal process, and this is one of the things that often scares away ignorant realtors and has them discriminate and discourage their buyers from taking VA offers. So, for instance, the property has to be in average or better condition to be eligible, no matter what the appraised price comes back in. So, for instance, let's say you're in a neighborhood where homes are like $400,000, and this house is new, but it's for whatever reason it's down bad, and it's only listed for like $300,000. Well, if it's listed for $300,000 because the condition is less than average or better, no matter what that price comes back at, you cannot be eligible for that VA loan. There are also certain minimum standards that the property requires, such as something basic like running water, no lead-based paint, proper ventilation, no wood destroying insects. A termite inspection is a requirement of a VA loan. But honestly, these are things that as a first-time home buyer, you should not be rolling with properties that are like down bad and need a bunch of renovations anyway. So once again, the whole thing of the VA loan is to protect you, the veteran and the consumer, and not getting a bad property. Because another thing is, if you're in the military, chances are you're not going to be in that property a lot if you're deployed and things like that. So they don't want you buying like a lemon property and then coming back home and not really having a residence to actually lay your head at. So that's all we got. Hope you enjoyed the episode. But as always, buy land. Rumor has it they're not making any more of it.